Zomato trades lower after CTO and co-founder Gunjan Patidar resigns. Patidar's resignation marks the fourth high-profile exit from the restaurant aggregator company in recent times.
CSB Bank surges over 7% after reporting strong business update for the third quarter. Gold loan growth shines with the bank reporting a 50% growth on a year-on-year basis.
Granules enters a strategic partnership with Greenco Zero C to enable green molecule solutions, leading the stock higher in trade.
Mahindra & Mahindra Financial is under pressure after posting a 3.3% monthly growth in dispersals, while the gross NPAs dips to around 6.2%. That compares with around 6.7% on a sequential basis.
It's all about financials. Shares of South Indian banks surged 7.5%, almost 8% after reporting an 18.5% growth in advances.
Hello and welcome to Chartbusters. I'm Nashil D'Souza and join me is Manglam Malu. Well, Manglam, the buy the dip continues.
Yes.
The only problem is volumes are still to pick up. But I think that resistance zone is what we're getting closer to, around 18,250 to around 18,350. The 20 and the 50 DMA is around there. But the sense you're getting is the base of the market, the near-term base from around that 17,800 odd. There is an attempt to gradually take it up to around 18,000 odd. So let's see whether or not there's enough fire pump. Good news is that the Nifty Bank has crossed that crucial technical zone of around the 20 DMA, closed above it, and now we're building onto that as well. 200 points higher. That as well is quite encouraging.
It is. Two things, which stand out for me in terms of a positive. The first one, of course, is that the Nifty Bank is outperforming. That continues. And secondly, for the second day running, the health of the market, the broader markets, is in favor of advances. And that is good because portfolios should be feeling good over the last two trading sessions. Importantly, I'm watching out for three stocks. The first one is HDFC Bank by virtue of the weight that it has on the Nifty Bank and the Fin Nifty. It is a Tuesday, so the Fin Nifty expiry takes place in the last hour of trade. So that is something we'll be watching out for. HDFC Bank has started well. The other one is Bajaj Finance. We're talking about pre-quarter updates, etc. We've got a few of them. Bajaj Finance too has a bit of a weight on the Nifty Financial Services Index. That stock too has moved to the high point of trade. And the third one I'm watching out for is from the consumer durables pack. Jewelry, so to say. I'm watching out for Titan. It started well. Yesterday was an underperformer. Currently at the high point of the morning. And this week, ideally, we should get the pre-quarter update coming in from Titan as well. A lot of people playing for a strong third quarter because the third quarter had wedding season. The third quarter had festival. And, with rising gold prices, maybe a lot of people are looking to buy gold once again as an investment bet. So those are a bunch of stocks I'll be watching out for.
Okay, all right. Well, Manglam, let's get straight to Shilpa Raut. Then she joins us to give us a quick technical check on the markets. Hi, Shilpa. Wishing you a good 2023 odd. You've had some fantastic calls in 2022, so good on you. But tell us, how do you approach the markets from here on? And what about your trading calls?
Good morning and Happy New Year to you and the entire team on CNBC. Today, as if we see Nifty, it has, now given a decisive breach above 18,200. So we are looking for target 18,400 from here. And for Bank Nifty, as long as we are holding 43,000, we will move towards 44,500 eventually.
Wow, that's some target that you've given. 18,400 on the Nifty and closer to 44,000, 45,000 on the Nifty Bank itself. Individual stocks, what calls would you have today?
I would actually go for CUB, City Union Bank. City Union Bank has given a breakout now above 180 and it is holding well above that. So for me, the targets would be 186 to 190 zones very soon with stop loss of 178. The other one would be REC. REC also has given a breakout above 120 zones. It is trading in futures at around 123. So I'm looking for targets of 128 to 134 in coming sessions.
Okay. All right. Thanks a lot for that, Shilpa. Well, REC, the other one is PFC, actually. Just take a look at the move we have seen. Two sessions up close to around 10% as we speak. Even this morning, it had made a fresh 52-week high, and PFC is now up close to around 4.5% or thereabouts. Both these two, remember, REC and PFC, they are a play on the power sector, the improvement out there. The financial health of Discoms is improving. The Gencos, they get their money on time. And if that plays out, then in fact, this could be an indirect way of playing the power sector reforms that we're seeing. Well, a good time to move to our special segment where we get you a few ideas for profit from Money Control Pro. Neha Dave of moneycontrol.com joins us to talk about a stock that she's tracking. Neha?
Today's stock idea is HDFC Bank. HDFC Bank's stock has underperformed the Bank Nifty and the peer banks in 2022. However, the bank's business growth has been very good and it is gaining market share at an accelerated pace. The bank saw an advances growth of 23% as of September end. And also amid the tight liquidity in the banking system, the bank's deposit grew by 19% as of September end, which was almost the double that of the banking system, which indicated the strength of its funding franchise. While the growth has been robust, the bigger concern for the bank has been the margins, which has seen a steady fall over the past 4 years. However, in the last quarter, there was a small uptick in the margins, and retail lending has also seen a pickup, which should boost margins going forward. Another concern area has been the likely rise in the regulatory cost post the merger. The management, however, has guided the merger to be EPS accretive from the first year itself. The HDFC Bank continues to deliver the best-in-class return ratios. ROA is return on asset is around 2% thanks to its impeccable asset quality and low credit cost. Talking about the valuation, the stock is currently trading at around 2.6 times core book value estimated for FY24, which is attractive considering the return ratios. While the impending merger weighs on the stock performance, it presents a good opportunity to accumulate this long-term compounder.
Welcome back. A couple of these pharma stocks doing well this morning. We have Zydus Life from the broader markets, which has moved to the high point of trade. And alongside that, we have Ipca Labs as well. Both these stocks have made the highs of this morning, gaining about 1 to 2% respectively. But the stock on our radar is Forgings. We are looking at the year ahead. We have with us Vidya Shankar Krishnan, who's the Vice Chairman and Managing Director of the company. Thanks a lot for joining in, sir. Wish you, your team, your family a very happy new year. And as 2020 has passed by, we've had a lot of conversations. Let's talk about the way forward for 2023. Can you spell out, the important things that you'll be watching out for as a company in 2023? What kind of targets do you have? You've given us clearly the targets for FY23 and going forward with regards to your capacity utilization. Can you give us a sense of how raw material prices, oil prices, and European demand is likely to pan out?
Sure. First of all, wish you, Mangalam and Nigel, a very happy, and your team as well, very happy, prosperous and healthy new year. So we hope 2023 will take India to greater heights. Looking forward, 2023 appears to be very strong on the domestic side with an election year ahead of 2023. I'm sure that capital spending in India, infra spending will go up, as a result of which the truck market, which is reasonably chugging ahead, will go ahead even stronger. So from the highs of 2018-19, we are yet to see the truck market go beyond that. So 2023 will be a strong year, is expected to be a strong year for CV segment in India. Raw material prices, as you know, we are largely dependent on steel. And steel today in India is, though with recession looming around the corner or practically there in developed economies, steel has been largely a joker in the pack because of the dependence on coal, particularly from India's point of view, imported coal to make the steel. So coal prices have been pretty volatile and they're subject to a few sources. So coal prices are expected to remain pretty stiff in the ensuing months. So steel is not expected to come down so much in the ensuing months.
Okay, all right. Hi, Mr. Krishnan. Morning. Thanks so much for joining in. Well, FY24 could be the best year actually for CV. Getting into an election year, we'll also have the replacement demand that will kickstart. So CV demand on the whole is looking good, and as per the past monthly data that we have, from the companies, it appears pretty much that CV demand has, as of now at least, not been hurt by the highest interest rates because bulk of the CV sales happen via financing. So good news for you. Before we go ahead, I just want to clear a few points. You had guided for around 1,400 crores, I think, in terms of revenues for this year. Do you maintain that? And also for the next year, I think you were looking in that vicinity of around 1,700 to around 1,800 crores. You're maintaining this guidance, right? 1,400, 17 to 1,800 with margins in the vicinity of 18 to 19%, correct?
Hi, Nigel. Yeah, let me elaborate a little bit. This year we had looked at 1,350 to 1,400. That looks to be very much on track. It has been reasonably strong, though I don't have the exact numbers yet. And anyway, they are in the non-disclosure period. So you'll hear from us formally shortly in the coming weeks.
Yeah.
The Q4 is expected to be stronger than Q3. So I would say the actuals for FY23 would be very much on target.
And
And FY24, we are looking at about 20 to 25% growth. To put some things in perspective, we have achieved, we'll be nearing about 72 to 75,000 tons of production this year.
Yes.
And in the next year, we expect to do anywhere near 190 to 100,000 tons.
all right.
What we've been consistently saying. Of course, the whole thing is subject to macroeconomic conditions. India looks to be very strong, as we are all well aware.
Right.
The thing is, the export markets are also not looking as bad. We hear from customers that they're down on inventory and could be looking at strong...
So that's heartening to know that exports aren't looking as bad as you feared it to be, and you maintain the guidance that you have. That's as far as the revenues are concerned. Margin 18-19% stays as well, right?
Yes, that looks to be reasonably on track.
All right. And, just wanted to understand a little about your other parts of the business. You said off-highways will be 5% of your sales as against 1%. Do you have a glide path to that? Do you have a long-term, the date?
I think we've said 5 to 7%, and this year we should be ahead of 7.
Okay, this year you should be ahead of 7%.
Yeah.
Okay, all right. What about... Go ahead, sir. You're making a point?
That's going pretty strong.
Okay, all right. And machining as a part of revenues, I think we're around 50% odd. You have some targets to take that higher, right? Could you tell us, what are those targets as a percentage of your total revenues? Where does it go to?
Yeah. We have looked at about 43%, 45% in the past.
Okay.
And we expect to achieve 60 to 65% machined. See, Nigel, what's happened is Forgings has made a big transition from supplying machined parts in addition to forgings to being a component supplier. And I think as a group, we'll be well on our way to being a product supplier in the next couple of years. And from there on to subsystems as well. So we made a huge transition, and still 2 more steps are on the way.
So machining is the higher margin product?
Mixed bag, but I would say that's the way forward. So like it or not, OEs and customers want only machine forgings. So most of the new orders that are coming in are all just machined. Hardly anything is just as forged.
But does that give you an opportunity to upsell to guys who are not buying machine products?
Yes, it does.
How big is that opportunity?
Huge. And that's where Forgings has made the large transition.
Okay, all right. Mr. Krishnan, valuation-wise, the argument has been that Forgings is cheap, given the kind of capacity, given the kind of revenue outlook that you have. Wouldn't you, have you been ever approached by any large fund or any large party to do a placement, get some money in, retire the small debt of 500-600 crores that you have, and then further grow the business from here on? It's just a query, because valuation-wise you have comfort, but yet there is something that's missing, it seems, to excite the stock market. You want to respond to that?
No comments. Largely, the market is very wise, and the market is also large. Probably the liquidity in the stock is not very high. So one reason why there has been a lot of inquiry from, I would say, from large fund houses, no doubt about it.
Yeah.
But the significant factor here is the liquidity in the stock. Whenever we give bonuses, shareholders love it, and they just hold on to the shares in any case. So it's simply not working.
So will you try another bonus, or there's any other, thought process that you have since you're getting inquiries?
I'm out of the now. I'm searching for what will give us better valuations.
Okay, so let's talk about that. Then finally, before we let you go, you have plans to invest about 100 crores in EVs. You wanted to be profitable. Then you have the opportunity with machined tools. You're saying that capex will lead to higher growth going forward, etc. as well. Is there any other new category that you're eyeing right now?
Nothing specific. On the EV space, we are looking at not just motors. We're also looking at controllers and at the axle itself. And we are seriously approaching technology partners for both. with both meaning controller and the gearbox or axle side. I'm sure that we will tie up with people in the coming weeks and months, and that should be propelling us to be able to supply a full-fledged what is called as an e-axle.
Tying up with people in the coming weeks.
And a gearbox.
Tying up with people in the coming weeks and coming months, we will definitely keep our hawk eye on those partnerships out there. I presume they'd be strategic in nature more than financial. Thank you so much for joining in, for speaking through us to 2022, and wish you a happy 2023 once again. With
Thank you, and wish you all the same.
Right.
Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. By the way, just pull up on stock Swan Energy. Remember a couple of days ago, that was on Friday, volumes for the market were lower, but the volumes on this counter were higher. The stock did end virtually at the high point of the day. And yesterday as well, in the final 2 hours of trade, Swan Energy was higher. Today as well, it's up close to around 4%. So in the last week or so, the stock has gained close to around 10%. Just keep an eye out on that one. Its 52-week high is at around 336 odd. Just the data that came in post-market on Friday was rather interesting on the delivery and the trading volumes front. But a couple of other names as well are moving around. Granules, that's the stock in focus after the company has entered into a strategic partnership. Ekta joins us to fill us in with more details on that. Ekta.
Thanks for that. Well, yes, definitely an interesting development for Granules, where they have entered into a strategic partnership with Greenco Zero C. It is to basically collaborate for green molecule solutions. There is a wider application in pharmaceuticals. The company says it is to build leadership position in sustainability and circular economy initiatives. The first collaboration would be in Andhra Pradesh. They would be looking to probably invest around 2,000 crores over the next 5 years. So it is a step, but one really needs to see what the execution levels would be. They have said that the company envisages to utilize carbon-free energy plus green hydrogen derivatives to produce value-added products such as PAP, paracetamol, metformin, APIs, as well as intermediates.
All right, Ekta, thanks a lot for that. So that explains why Granules is higher in trade today. But we have a bunch of updates coming in from the BFSI, the banking space now. CSB Bank, South Indian Bank, both of them surging in trade after reporting their third quarter business updates. What were so good about those updates? Abhishek joins in with the details there. Abhishek.
Well, Mangalam, as you mentioned, lenders are reporting good set of numbers, especially on the loan growth front. And this augurs well in a rising interest rate scenario, as there are chances that, the net interest margin can further improve. So talking about CSB Bank, they are taking the sheen away from NBFCs in terms of the gold loans. Deposits are up almost 19% YOY and about 8% quarter-on-quarter. They have lost out on CASA ratio given the fact that term deposits have increased massively. This is another trend that I'm noticing across banks, that CASA ratio is almost flat or declining on a sequential basis, but the bulk or term deposits are increasing on a sequential basis. Advances growth is 25.7% YOY and about 5.5% sequentially. In that, the gold portfolio, that's interesting because it's grown at 50.8% YOY and about 9.3% quarter-on-quarter, which has meant that the gold share in the advances has increased to more than 47% versus 45.5% in the previous quarter. X of gold loans, the loan growth is at 9.55% YOY and about 2.5% sequentially. Talking about South Indian Bank, the deposit momentum is weak. However, the advances growth is healthy given the fact that CD ratio has also improved, which means that the net interest margin can remain healthy. Deposits are up 2.7% YOY and about 2.5% sequentially. The CASA ratio has dipped down to about 33.84% when compared to 34.55% in the previous quarter, but CD ratio has improved by almost 50 basis points sequentially to 77.35% when compared to 76.8% in the previous quarter. Loan growth pretty robust at 18.5% YOY and about 3.2% sequentially. Back to you.
All right, Abhishek, you're a busy man today. Thanks so much for joining in and filling us in with that quick update. For the time being, though, we have run out of time on this edition of Chartbusters, but you stay with us. Trading Hour comes up next.